All right. Welcome, everyone. In this discussion, brought to you by the experts at ProTax Accountant, we're going to tackle one of the most critical topics for UK contractors and businesses, and that's IR35. Now, whether you're a freelancer or you're hiring one, this is something you absolutely need to get your head around. Okay, let's dive right in. So here's how we're going to break it all down. We've got 6 key parts. We'll start with the big picture, what is IR35? And then we'll get right down to the nitty-gritty, including a practical action plan you can use today. By the end of this, you'll have a much clearer picture. All right, first up, what on earth is IR35? It's a term that gets thrown around a lot, often causing a bit of a headache and a whole lot of confusion. Let's try and clear the air a bit. We're calling it an adventure you can't afford to ignore, but let's be real, getting IR35 wrong is much more of a tax nightmare. We're talking potentially thousands of pounds in unexpected tax bills, and you guessed it, a lot of unwanted attention from HMRC. So what's the core idea here? Well, IR35, or the off-payroll working rules, are really just tax rules. They're there to figure out if a contractor is genuinely self-employed, or if they're what's often called a disguised employee. Essentially, it's about making sure people are paying the right amount tax. Okay, this is where it gets really important. When you look at an IR35 assessment, there are really only 2 possible outcomes. You're either inside or outside. But how is that decision actually made? Let's get into the core tests. So here it is, the big split. If you're inside IR35, you're pretty much seen as an employee for tax purposes. That means your client or agency handles your income tax and national insurance through PAE. But if you're outside IR35, congrats! You're seen as a genuine, independent business. You have way more flexibility in how you get paid, but you're also responsible for your own business taxes and can claim a wider range of expenses. It's a huge difference. So, how do they figure this out? It's not just about what's written in a contract. HMRC looks at the reality of the working relationship, and it all boils down to these 3 key tests. First, control. Who really dictates how, when, and where the work is done? Second, substitution. Can the contractor send someone else to do their job? And third, something called mutuality of obligation. Is the client obligated to offer work, and is the contractor obligated to take it? These are the big 3. And this is a super important point. Contracts matter, but what actually happens day to day matters even more. Let me give you an example. Imagine a design consultant. Let's call her Sarah. Her contract says she can send a substitute. Great, right? But in practice, her client insists that she, and only she, attends every single meeting. In a case like that, HMRC would likely look at the reality of the situation and say, nope, that looks like employment. She'd be inside IR35. Now, just to keep us all on our toes, the rules aren't set in stone. The landscape is always shifting, and there are some big changes coming in April 2025. The government says these are to improve compliance and reduce complexity. Let's see what that actually means for you. Okay, here are the headline updates for 2025. We're talking about new relief for clients to avoid double taxation. That's a big one. There are also new thresholds for what counts as a small company, new rules for how clear status determination statements have to be, and tighter rules on who's liable in the supply chain. Lots to unpack here. All right, let's talk about this double taxation offset because this is a huge relief for businesses. In the past, if a client got an IR35 decision wrong, they could be on the hook for the entire tax bill, even if the contractor had already paid some tax on that income. It was brutal. Now, HMRC will offset the taxes the contractor has already paid. This makes things a whole lot fairer. Check out this number, £15 million. What's that about? Well, that's the new annual turnover threshold for a company to be considered small under these rules. It used to be 10.2 million, so that's a pretty significant jump. And why does that matter? Because if your end client is officially small, the responsibility for determining IR35 status falls on you, the contractor. So this change could mean some contractors who used to have their client make the decision will now have to figure it out for themselves. It's a really important distinction to be aware of. Okay, so we've gone through the rules, the tests, the changes, but what does this all actually mean for you in the real world? Let's break it down, whether you're a contractor or a business that hires them. All right, if you're a contractor, what's the takeaway? Well, there's some good news. The tax offset means fairer outcomes if there's a dispute, and there's a push for clients to give you a much clearer status determination statement, or SDS. But for most contractors working with medium or large businesses, the determination is still out of your hands. So this is a really good time to take a step back and review your whole setup. And for the businesses out there, look, the liability risk has been reduced, which is great, but it hasn't gone away completely. You still absolutely have to issue clear status determination statements for every single contractor. You need to review your contracts and your supply chain. And I can't stress this enough. Reasonable care is the name of the game. Making a blanket one-size-fits-all determination for all your contractors, that is not compliant. So, to navigate all this without pulling your hair out, you really need a solid action plan. Let's walk through a practical checklist you can use before you sign on the dotted line for any new contract. Okay, here's your checklist. Number 1, confirm who's responsible. Is the client small? If they are, the ball is in the contractor's court. 2, use the tools available. Run the contract through HMRC's own CST tool, at the very least as a starting point. 3, document absolutely everything. Save the contracts, the CST results, the reasoning behind a decision, all of it. 4, issue or request the SDS. Businesses must provide it, and contractors must get it and review it. And finally, number 5, and this is the big one, make sure the contract and reality actually match up. Look, I get it. The rules are complicated, and the stakes, well, they're pretty high. But the good news is you absolutely do not have to figure this all out on your own. If you're feeling at all unsure about how these rules and the new changes affect you, I really recommend getting some expert advice. The team at ProTax Accountant specializes in this stuff. They can do expert IR35 reviews and provide all the accounting support you need. You can reach them on WhatsApp or by phone at 07985689912 or just drop an email to info@protaxaccountant.co.uk. Seriously, getting professional advice can save you a mountain of time, money, and stress down the line. So I'll leave you with this question. What's the one step you're going to take after watching this to protect yourself or your business?